Thank you everyone for being here and good morning, Mainnet NYC. Who's having a great time so far? Yay, all right. So I'm going to talk about the three hottest topics on the planet today. I'm going to give you new information. I'm going to be sharing innovations coming out of SingularityNet and Cogito, our RWA real world asset on-chain DeFi protocol at SingularityNet. We have our CEO and COO here in the audience if anybody wants to catch up with us afterwards. So let's start. A little bit about myself. I am the Chief Operating Officer of SingularityNet. Does everyone here know SingularityNet? My goodness, that's a lot of you are in for a treat. So I'm the CEO of SingularityNet, but before I moved into full-time working in advanced frontier artificial intelligence technology, I spent 25 years working in robotics technology, risk and regulation in major financial institutions. Now, I left banking, when did I leave banking? 2021. And I have to say, when I left, there was quite a negative attitude right across the banking industry towards crypto. Why? It's eating their lunch. And what I'm going to tell you today is we're coming to eat much, much, much more of their lunch and possibly their dinner and their breakfast as well. So banks were always skeptical about crypto. They tried to kill it. JP Morgan, Jamie Dimon famously said 10 years ago that Bitcoin is a terrible source of value. Now, at the time, there were maybe 2 million Bitcoin users. There are now 75 million Bitcoin users, 220 million wallet holders across the world. We have a crypto market worth $2.3 trillion. It is the highest performing asset in the history of the planet. So what we're now seeing, major institutions, thanks to regulatory changes, thanks to new vehicles becoming available on the market, are plowing into crypto. Who all thinks that's a good idea? I think it's a good idea. Before we eat their lunch, while they still exist. So why are we seeing this movement of traditional investors into cryptocurrencies? And what is the landscape like right now? So many of us in crypto have like an allergic response to regulation. Who here has an allergic response to regulation? Yeah, that's good. Only a couple. However, what we're now seeing in this next wave of cryptocurrency adoption and acceleration, we're seeing that regulators are bringing the bucks into crypto for us. Regulations like MiCA, regulations like Basel Committee are establishing policies, establishing regulations. And what do these do? They protect the ordinary person. They protect the small investor. They protect the companies. They protect the people against financial crime, against market malpractices, against manipulation. And they give greater certainty to the financial institutions that they can safely, and that in fact, it's not just a possibility for them to move into crypto, to develop different digital assets products, but it's an imperative for them. And now we're seeing banks all over the world plowing into particularly crypto ETFs. Now, what we saw in January, the Bitcoin ETF was maybe slightly reluctantly approved by the SEC. And we've seen market volatility going on ever since then. But who knows how much money a day is currently pouring into Bitcoin and into crypto ETFs, in just Bitcoin alone? Take a guess. $100 million, $1 billion, $1 trillion? $1 billion a day since in the last 10 days or so, pouring into ETFs. We're seeing JP Morgan, Wells Fargo, we're seeing Bank of America, we're seeing all of the brokers, Grayscale, Fidelity, Charles Schwab, all of the big names are moving into crypto ETFs because they're the hottest thing on the planet right now. Well, except for artificial superintelligence, which I'm going to come on to. So what is this trend we're seeing, and why is it so important? The big trend Forbes announced, the next crypto bull run is going to be driven by real-world assets with artificial intelligence on chain. And that's what we're doing at Cogito. It's what we're doing at SingularityNet with a number of different programs with our spin-offs. And why? Why is a digital asset better than a normal asset? I've given you the answers here, so I'm not going to do a test of the audience. But transparency. Blockchain provides a level of transparency that is simply impossible to achieve in traditional financial instruments and in traditional payment vehicles. However, on-chain with immutable records, validators, we can have full transparency. And just think how revolutionary this is for your average small investor or your average person who doesn't know what to invest in and what their money, what their asset really looks like. They're programmable. So with programmability, we have the ability to actually insert functions into these assets, right? We can insert KYC, which is what we do at Cogito protocol. We can insert functions. We can program these assets. We can program dates. We can program maturity. We can program any kinds of functions. We can program payments. We can program automated escrow. I mean, it's a phenomenally adaptable and flexible technology. And we have composability. Now, does anyone here know what blockchain composability is? It's like Lego blocks. We can use these assets, we can use these instruments composably across DeFi. We can compose new assets. We can work cross-chain protocols, and we can work with dApps and create all new assets. And if you think about, we're at SingularityNet and at Cogito, we're driven by positive impact on humanity. Imagine the positive impact on today's small investors who want to get into AI, who want to get into crypto, being able to get in a regulated way with high security, transparency, programmability, and composability. So we can make individual assets that are absolutely appropriate and suitable for the investor who has them in mind.
That's right.
And transferability, of course. So we can buy, sell, move assets around. So fantastic opportunity for real-world assets. And the question is, where is all this going? Right now, today, we have $10 billion of real-world assets on chain. Estimates are out that this will be up to 16 trillion. And I'm going to come on to exponential growth bias in a moment. And Bain & Co., who are big in this space, they're anticipating that all real-world assets, bonds, real estate, traditional financial instruments, will ultimately be tokenized. Because this applicability, this use case, this programmability, traceability, and composability makes them a far more viable method for storing and managing real-world assets on-chain. So Bain & Co. are predicting will be up to $450 trillion, the entire bonds, real estate, and other financial services market. And that every single digital asset will move, every single financial asset will be tokenized on-chain. Who believes that? Let's do it. Let's do a show of hands. Who here believes every single traditional asset will, in the next 10 to 20 years, be composed on-chain? What have we got? We've got the on-chain. Wow! Can we please do a report? 50% of NYC Mainnet attendees estimate that real-world assets are all going to be tokenized in the future. Wow. Exponential growth. So I've talked about ETFs. I've talked about RWAs. Now I'm going to talk about my favorite subject, which is artificial intelligence, artificial general intelligence, and artificial superintelligence. Now, who here works in AI or has worked in AI? Who's ever built an AI model? Well, Okay. You folks, let me tell you, there's a whole world of fun out there for you to get out and explore. And I'm going to start by saying, anyone who hasn't worked in AI, the AI revolution is predicted to be the biggest, the fastest, the vastest impacted technology revolution of all time. It's going to be way faster than the mobile revolution and the internet revolution, every revolution we've had to date. And there's an excellent course on Coursera by Andrew Ng, that's spelled NJ, called AI for Everyone. And I really, truly recommend get into it. Get into AI, get on the wave, surf the wave, don't be rolled over by the wave. So what we're saying, 80% of banks see big tech potential in AI. Do any of you work in banks and traditional financial institutions here? Maybe a little one. All right, I'm among friends. 95% of senior leaders in a recent EY report said that they are investing in AI at the moment. An EY report predicted that the number of companies investing more than 10 million per annum is going to double in the next year across 2025. Investment is still absolutely pouring into this space. Banks are investing, investors are investing in fintech startups, and we're seeing potential, according to Business Insider, for, call it $500 billion, $447 billion cost savings in one industry alone, just from artificial intelligence. Imagine you multiply that across all the other industries, construction, extraction industries. This revolution is going to be phenomenal. Now, this is really interesting. People underestimate AI capabilities due to exponential growth bias. So I'm always fascinated by our biases. What are they? Where do they come from? How do they work? And this is a new one to me. Exponential growth bias is our human inability to get our heads around exponential growth. We actually can't do it. As humans, we can't foresee the pace of this artificial intelligence and RWA on-chain revolution. However, we should not. And at SingularityNet and Cogito protocol, we do not underestimate the potential of AI and its exponential growth bias. Our CEO of SingularityNet, Ben Goertzel, is on record recently as saying that within the next 7 years, 80% of jobs will be taken by artificial intelligence in this decade. And we're finding that leaders are starting to get much more positive return on investment on their AI implementation. So what are they doing? They're doing NLP, large language models. This is the use cases. So the NLP and large language models are our chatbots for the most part, a little bit of customer service assistance. Recommender systems have been in use in financial services forever, but they are super powered by artificial intelligence because recommender systems with AI enables financial services industries to very, very well hone in on what products are suitable for which clients are not suitable for which product, which is just as important in the regulated space. Portfolio optimization, of course, we can use AI to work out what is our balance of risk, what is our balance of return, and predict and project new portfolio potential as well as existing portfolio growth. Fraud, transactions, AML, KYC is probably the most ingrained, the longest implementation of artificial intelligence. And it is really incredible what AI can do for anti-money laundering and KYC purposes, as well as automating the KYC process. From an AML perspective, we can now do network analysis of organized crime groups. We can see where money is flowing and tracking right across the world, and we can very much more effectively, much more accurately detect outliers in normal payment flow. And a simple AI, if you do your Andrew course, a simple AI clustering technique shows you those outliers. And that has such a huge benefit for the industry. One, it traps the proceeds of crime, so benefit for the whole world. Two, it speeds up the inconvenience for customers. And three, it enables us to catch more of the bad guys. And algorithmic trading, well, we all know what that is all about. And in my master's thesis in 2019, I published a thesis on suitability of different AI methods for algorithmic trading, working across a number of different markets. And algorithmic trading is an area, it's interesting, it's only 21%, I guess because trading is a smaller chunk of the industry. But it's an area where hedge funds traders can really get an edge, but with a human in the loop, generally speaking, for any edge cases. So we manage risk as well. However, banks have this regulatory issue. Regulation around AI is burgeoning all over the world. We're seeing almost every country in the world publishing ethics of AI policies. We're seeing transatlantic AI agreements between the US, between the UK. We're seeing major bodies like OECD publish ethical AI implementation guidelines for banking. It's not easy, though, because in order to effectively and safely implement these advanced technologies, we need an organization that's educated. We need an organization that understands AI, at least to the level of detail that they need to know that it is doing no harm to its clients. They need to understand what can be black box AI. So large language models are based on deep neural networks, and they are the implementation which is driving the most economic value in the world today from artificial intelligence. But they're completely black box. They can't be interpreted other than by running an interpretation method on top to try to interpret why did that algorithm make the decision that it made. Many, many, many applications in financial services cannot be black box decision driven. And this is where our Cogito protocol and with SingularityNet, we're at the frontier of developing transparent algorithmic approaches for financial services. Algorithmic approaches that work with neurosymbolic techniques, that work with rules that can develop and output rules that compliance teams can sign off. And so as the education grows in banking, as the ROI continues to grow from AI investment, what we're seeing is fantastic growth and exponential growth in the rate at which models are developing and the rate in which AI is developing in our world today. Now, do we want big tech to own the future? No. Thank you, team over here. We definitely don't want big tech. How many people here work in big tech? We don't want big tech to own. We don't want big tech to own the future. We want the future to be in the hands of everybody. The AI revolution should not exacerbate the power inequalities, the structural power deficits on our planet today. The only opportunity I see for humanity to dramatically shift the power structures of today is with artificial intelligence. I'm very, very proud to be a board council member of the Artificial Superintelligence Alliance. This alliance was announced in March, implemented in July. It brings together the biggest or some of the biggest names in artificial intelligence on chain. We have SingularityNet, who are the OGs, 2017 TGE. We have Fetch.ai, which leads in use cases and commercial AI agents. And we have Ocean Protocol, which provides secure data sources for artificial intelligence. And last week, we announced a successful merger of a company called Kudos Compute, which is a giant AI data GPU hardware data service provider with a decentralized on-chain application distribution layer. So very, very soon, everybody's going to be able to use the ASI token to pay for agent services on our Fetch and SingularityNet marketplaces. But why are we doing this? We're doing this because it is the greatest imperative of our time today is that the AI revolution is for the benefit of the many, for the little guys, for the developing markets, for the NGOs, for everybody in the world who just wants to progress themselves, who wants to live their best lives and make their finest contribution. Because what we're seeing today is big tech is primarily developing AI tools for the top 1% of people in the planet. And our goal at the Artificial Superintelligence Alliance is open source, democratized, community-governed artificial superintelligence for the benefit of all humanity at a beneficial singularity. Anyone know what superintelligence is defined as? Let me define it. We have today's narrow AI, which many of us wouldn't even call AI. We just call it machine learning because it's not that intelligent. Then we're working towards artificial general intelligence, which is AGI. And at SingularityNet, we're at the very frontier of the R&D towards this incredible technologies, which will be the most powerful technologies ever invented, and possibly the last technologies ever invented by humans, because these intelligent AGIs will start to make their own technologies at this point. Once we have AGI, which at SingularityNet we're predicting will be this decade, so we're predicting 2 to 7 years for AGI, artificial general intelligence, intelligence that can domain shift from one domain to another and be genuinely creative. But once we have AGI, what we don't know is how long it will take to get to ASI, artificial superintelligence, intelligence that is smarter than humans. So I'm going to do another show of hands, please. Who believes that AI will be smarter than humans, say within the next 20 years? 1, 2, 3, 4, 5, 6, 7, 8, 9. I'm going to go 43.7% of the audience agrees. Who here is convinced that artificial intelligence will never be smarter than a human? Thank you for sharing your diverse perspective. One of us thinks it will never come. Two. This could be your exponential growth bias. Take a look at the paper. We do. Our visionary leader, Dr. Ben Goertzel, he envisaged at age 3, he set himself a purpose of developing a robot that was smarter than Data on Star Trek, the robot on Star Trek, and it's his life's work. We have a team of engineers, 100 or so AI data scientists around the world who are not constrained by producing products every day because we're in crypto. We're at the very front of this race. What do we have in the ASI stack? We have AI agents on the Fetch marketplace that are commercial use case oriented. We have an AI to AI marketplace where AIs can communicate with each other with a protocol we've named the AI Domain Specific Language, AIDSL. And AIDSL enables AIs to interact with each other with no human intervention. They can say, one model can say, I'm doing a speech to text. Can you do me a text analysis? I need another model to analyze my text. And it can assess the performance of all the other available models on the marketplace and continuously optimize and continuously select the highest performing algorithms, because the speed at which models are developing today is blistering. So we have a dynamic, ongoing, continuous optimization of our AI to AI marketplace. We have our OpenCog Hyperon platform, which enables all AIs to come and interact together based on a large dynamic metagraph called Atom Space. Of course, we have data privacy and trading. That's essential for anything in blockchain, anything in financial services, and Ocean Protocol are absolute masters in Web3 of this. We have our number of layer 1 networks, starting with the Fetch layer 1 network, but we are fully cross-chain and interoperable. And most recently, we've just bought $23 million worth of hardware. Now, I know that doesn't sound a lot in the scale of like Microsoft and Google's investment into hardware, but being wisely used by a number of extremely advanced scientists, this gives us the edge and the ability to beat big tech to AGI for the benefit of all humanity. So, final point, what could a tokenized AI economy look like? How do we bring together these incredible artificial intelligence technologies with the incredible opportunities that blockchain offers for tokenization and the flexibility and durability of those instruments? So what if we started to tokenize AI models? What if their average small retail investor, right? So I told you just now, 220 million crypto wallets in the world. That's only like less than 5% of the world's population. We want to bring this wealth, and we want to bring this technology, and we want to bring this opportunity in this period of exponential wealth creation that this industrial revolution is going to bring. We want this wealth creation to be available to all across the world, open source, democratized access. And now we want to bring AI. So if you're my cousin James wants to invest in AI, he can see it happening all around him. Where does he go? What can he do? Buy some NVIDIA stock, buy a bit of Google. You know, it's just finding high potential, high performance, transparent investments into artificial intelligence is not easy for the ordinary average person who is not in technology. But what if we start to monetize all of the assets, tokenize all of the assets? We can tokenize the GPUs, we can tokenize nodes, we can tokenize compute, we can tokenize energy, we can tokenize data sets, knowledge graphs, knowledge bases. We can tokenize the AI front to back infrastructure and application architecture to give everybody a chance to come and invest in artificial intelligence on Cogito protocol. We have full ownership transparency, so people know what they have, when they have it, and are able to understand and work with it. And of course, it's going to be totally accessible. So as we move into this AI revolution, what we really need to ask ourselves is, where does the hype end? And what I would say is that in artificial intelligence, there's a lot of hype around the capabilities of today's deep neural networks. We're on the neural symbolic camp. We don't think deep neural networks have the ability to grow beyond their current status, have the ability to develop into AGI. It's a particular type of technology. There's a lot more hype around DNNs than they're actually capable of. I don't know, how many of you saw that McDonald's had to withdraw their drive-through chatbot? Did anyone see this a few months back? McDonald's withdrew their drive-through chatbot that they'd been investing in since, we think, about 2019, so 5 years of investment and development. They withdrew it because it was putting bacon bits on the McFlurries and it was giving people 20,000 cups of tea instead of one green tea. That is where the hype ends. That is where deep neural network technology, we're seeing it being de-implemented in some corporates around the world. The reality starts with tomorrow's AI tools. These are neural symbolic methods. These are knowledge graphs. These are genetic programming. These are non-axiomatic reasoning, probabilistic logical networks. All of the other kinds of AI are so much more applicable in the next wave of AGI now that we've hit the roof of the DNNs. So reality starts with SingularityNet, with Cogito protocol, with advanced technologies, open source. I'll encourage anyone to come and look at our GitHubs, to come and get involved in developing, be part of our community. ASI community is highly active, engaged, and doing a huge amount of progress for humanity. The reality starts with us here today with AI that can be implemented transparently in a way that is legally compliant to put real-world assets on-chain and bring prosperity and the opportunity for prosperity and technological advancement to every single person on our planet today. Thank you.